Hey everybody, time for Housing Bubble 2.0 news again for the week. Second video this week, and the reason being so much is going on. It is literally difficult to keep up. I do a video and then I look and 5 minutes later something new is posted online that's relevant to the industry. So it's getting tough to keep up with the marketplace these days in housing. But it's interesting times, that's for sure. So here's what we got going on for today. Today's topic, September housing numbers are out. We'll talk about some mortgage rates, talk about migration due to taxes, homeowners staying put, and home builder stocks collapse. So lots to talk about. So September housing numbers came out according to NAR, National Association of Realtors. After a flat August, existing home sales in September fell to the lowest level in 3 years. It was the 7th straight month it has fallen. There was a decrease of 3.4% from August to September as far as sales volume is concerned, and sales are 4.1% below September of 2017, so year to date. Again, NAR attributed rise in interest rates and higher prices to this decrease in sales volume. However, interesting to note that the median home price actually increased about 4% from last September. And this is the 79th straight month that the median home prices increased. Interesting. So we're seeing, less volume, but still having the effects of the high prices, etc. So that will start to change. The sentiment is the performance is underwhelming, and expectations it will be even more underwhelming as we go forward. And I think we'll start to see the slide as the months go on. An example of this is, for example, Atlanta, where it was reported in a couple of reports that they had a 15% decrease in home sales year over year. And this is much more than the national average, so they're concerned. And number of listings going on the market in Atlanta has definitely increased as well. In Minnesota, the Twin Cities, which I guess would be Minneapolis, St. Paul, had a 5.9% increase in listings from a year ago. So you can see that various markets across the country are starting to feel the effects of the change or the shift, and we're going to see more and more of this as far as stuff goes on. The Redfin CEO, so this guy obviously, he's good speaker, looks like a pretty decent guy, and he talks a lot about the industry, so he's always interviewed by a lot of the news outlets. So he was on CNBC this week, and essentially his take, and he stated that we are sort of working into what is the perfect storm in the U.S. housing market, and the reason why he said that is that we have rising prices, we have slow wage growth, so even though job statistics and reports may look great, wage growth is definitely not keeping up with housing growth the same pace, and he goes the rise in interest rates. So all these three things, rising rates, slow wage growth, and rising prices are, I guess you could say, creating a perfect storm in U.S. housing, which means there's going to be some future problems. Now, him as the CEO of his company, he's not going to say certain things like bubble and crash and stuff like that, because stock prices will change based on what he says. So he's trying to be as, I guess, eloquent and as non-committal as possible, but you can see it that they're already predicting they're going to have some change in the future. Now, realize this as well. Foreign money is down. What I mean by that is foreign money coming into the country is down. Foreign investment funds. Money has dried up from Russia and China as well. And the reason being, well, there's new restrictions on some of these countries taking money out and moving them across to the U.S. here. I know that the Chinese government, for example, is very concerned about money leaving China being used to invest in housing over here in North America. There are some locations that actually, I know Vancouver, for example, has a surtax. When you buy a property, you're paying an additional tax if you're a foreign buyer. And the whole idea is that they're trying to dissuade either homes that are being bought sitting vacant for a year or two, and also the Chinese government is dissuading money from leaving their country, and they are having their own housing bubble and crisis right now. If you take a look at that, it's quite interesting. Also, there's a lot more scrutiny when deals are being closed with money that's coming in via wire from other locations, from LLCs. So I guess you could say title companies have been instructed to really look at these things. And again, they're looking at, again, is there circumvention? The governments are now going, where did this money come from? Where did this cash show up here? So everyone's very in tune or uptight about where money comes from these days and how it's being used to close property. And I've experienced that with a couple of buyers as well too, going, where did $100,000 just show up? So if you literally have a mattress full of cash, you go to the bank, they're concerned. Where did you get this money? So this is where we're at in today's society, unfortunately. So just realize that foreign investing is down, and that's also going to play a part, especially in the mega cities like the New York City locations and the West Coast in California and Seattle and Portland. That's where you're going to see lack of this money coming in will start to affect housing prices quicker. Mortgage rates, of course, mortgage rates are at an 8-year high. Applications for last week tanked 7.1%. Again, volume is 15% lower compared to this time last year. So obviously purchase volume is less, and refinance volume is less as well too. MBA, which is a Mortgage Bankers Association, recently had a meeting at their annual convention, and they expressed concern over shrinking volumes of mortgages and profit. Well, you know what? That does happen. I mean, the housing market, it's got to slow down. These are the groups that will be affected, and the other businesses. But they are optimistic because of our strong economy. So of course, we're optimistic. We think great things are going to happen. And again, this is it's part of the process. So will we see riskier loans, more of them in the future? I'm sure we will. And like everywhere, mortgage loan originators are going to feel the stress of less buying. The banks are going to feel less profit, and it just gets a trickle-down effect. So realize that that's part of the process when housing slows down and the market starts to shift or change. We've seen it before. Migration due to taxes. This is becoming quite interesting. So they're referring to SALT, which is state and local taxes. That's the acronym. And what we're finding is that more and more people are starting to migrate from high tax states to lower tax states, those with the preferential rates and the setup. And the reason being is just clear. They can't write off what they used to be able to write off before. And they're prohibited from maybe investing or buying like they used to before. They're leaving California. They're leaving the Northeast states. They're leaving New York. They're leaving Illinois. So places that have higher state and local property taxes, people they're going in droves. A lot of migration. And again, they're going to locations where they can find affordable housing. They can find less traffic, which means less time to commute, which means a better quality of life, where they could spend their money on enjoying life as opposed to 2 hours either way in the car, commuting, things like that. Many are relocating to places like Idaho, Pennsylvania, other locations in the Midwest, Florida as well too. We're getting a lot of people relocating to Florida. Obviously, apparently Miami Beach is benefiting big time from this. So people are selling in New York and Connecticut, and they're coming down and establishing residence in the Miami Beach area. So their money is going to go farther down here, and they're going to have benefits of less taxation. And just as a side note, a lot of times people are looking for the benefit of homeownership and protection of for financial issues. Now, Florida is a good state for that, and just a little thing I'll share with you here. I wasn't doing real estate, obviously, or even I think here at the time, living here, when this all went down. But if you remember Enron, so Enron, back in the day when they had all those issues with the money, the pensions, all the offshore accounts, etc. Well, when they went through that whole, federal issue and talking about it on, it was on the TV and the whole bit, they interviewed, they were actually talking to the CEO and CFO and all those guys, CEO, chairmans, and they faced, fines, penalties, jail time, whatever it was. Funny enough, a lot of those guys that were in the hot seat and under the inquisitions purchased, $20 million mansions on the water in West Palm and, that Boca Raton area, Lauderdale area. Just why? Well, because Florida real estate pricing a little better, they're getting more bang for their buck, but Florida has what's called a Homestead Law. So if you buy a home there and declare that's your homestead or your primary residence location, it affords you some benefits with respect to taxation, but also it affords you the fact that creditors cannot force you to sell your house to pay off creditor debt. Now, of course, foreclosure, mortgage, that's different. Property tax trumps all that. But the fact of the matter is that if someone's suing you and has a judgment, they can't force you to sell your primary property where you live in order to pay them that judgment amount. Just a little side note on Florida. So that's why a lot of wealthy people do like coming here, because there are some, they might show up here strategically during certain points in their life, because there's some benefits it affords a lot of people to have a lot of money. So there you go. And as I said, instead of buying a New York City Manhattan condo, just buy one in Miami Beach. Cheaper, less issues, less overall taxes, etc. So anyway, and also the New York City area, Manhattan condo market, the developers dropping prices, the whole bit. They're going through a full-blown correction right now, as I've read. So stuff like this happens, where it's overdeveloped and overbuilt and prices rose so fast. And again, going back to the fact that a lot of that foreign money who would buy a lot of those locations and places to live aren't happening anymore. What we find also is homeowners are staying put. And what I mean by that is they're staying in their homes longer. So according to First American, who did some studying on this, rising interest rates create a financial disincentive that prevent existing homeowners from selling their properties, obviously. So they're staying in their homes longer. So before the financial crisis, the time people were in property was about 4 years on average. Then it increased to about 7 years between 2008 and 2016 because many people who wanted to sell maybe couldn't sell because their homes were technically underwater with respect to the mortgage and the property values at the time. That makes sense, of course, as you look at this. But now, even though there's been a pretty good increase overall in equity in homes and values, the tenure in homes is about 10 years now, actually. They did as of September 2018, the sort of average tenure in a home is 10 years. So again, what that really means is that, if I have a home, I want to cash out, that's great, but where am I going to move to? So I have to pay a premium now because prices are high to live someplace. Plus, if I have to get a mortgage, I don't have those nice affordable rates I had back in the day. Now I'm paying, 5% or whatever the number is. So it's, I'm paying more for less ultimately, and it's not as interesting. So people are just not selling. They're not putting their homes in the market, which affects the inventory, which ultimately has affected prices being unaffordable the past few years. This is what I call the gridlock of homes. So, and a lot of this is baby boomer generation. So baby boomers have a lot of homes, and they built up a lot of equity in these homes, and they're not selling for a couple of reasons. Some of those reasons are that they have adult children still living with them, or kids that have come back and are still there. So for them to downsize, it's like, where is our son or daughter going to go, or their family, for who knows what's going on there. But that's a situation and consideration. So they're not selling for that reason. And also, many plan to use this equity they've built up over the years as part of their retirement funding. And again, if you're selling now and going to buy a place that's at a premium price, you've kind of lost that growth factor in your home, and what are you going to do? Maybe it's not the right time for this. So they're staying put, which again, as I said, causes gridlock, less homes in the market that would normally be coming on through this just normal life cycle, cyclical process. And again, trading up is costing more. Sell my home, my starter home today, trading up, it's like, what am I going to do? I need more square footage, but I'm just paying too much per square foot. I'm paying too much in interest rates, and maybe I'll have some taxation issues as well too, increases as well. So that doesn't make sense for a lot of people, and that's why we're seeing a lot of this gridlock going on right now. Okay, so something has to give, the point here, and it has to be prices in the next little while. Interesting to note though, home builder stocks have collapsed. So Bank of America / Merrill Lynch have downgraded a number of home builder stocks. Wall Street is growing bearish on the whole housing market, essentially. Bank of America downgraded Toll Brothers, Pulte Group, and NVR. The analysts at Credit Suisse also downgraded builder stocks. They also downgraded Home Depot and Lowe's. So those are not home builder stocks, but where do people go to actually buy materials, to rehab, and contractors buy materials, etc. And when you're fixing your home up, etc., you're going to those two locations. So obviously, I would assume that revenue or profit indicators are falling in Home Depots and Lowe's as well. Don't quote me on that, but that's the assumption. If you're downgrading stock, then something's happened, or the outlook is getting grim. Lennar and KB homes fell 2% on Wednesday because of that downgrade, and really the reason being stocks have been on a steady decline the past year for home builders. Analysts don't see any stabilization coming in the home builder market, and profit growth looking forward for the next year has been really cut by a third. So when you're looking at stocks, you're saying, well, we have higher increases in price. We're going to have lower weakening home sales. Our profitability is not that good, so therefore that's going to affect stock prices immediately. Now, the issue is that home building is such a key factor in the overall U.S. economy, and the more you think about it, it makes sense. So not only is it just stocks, it's land purchases, it's entitlement costs, it's development costs that are paid to the cities and counties, etc. Utilities, growth, roads, retention ponds, all those things. Those things are built and developed, and which means people are employed, materials are purchased. Big machines are being rented and utilized. Gas is being used to power them, and you've got sales of goods. So the materials being purchased for the home, the finished materials, the workers that put them in, the ancillary products. You buy a home and move in today. What are you going to do? You're going to go to Target, you're going to go to Crate and Barrel, whatever store you like to go to, and you're going to purchase dishes and appliances and decorations and paintings and do some home improvement stuff or landscaping. So when you buy a home, all these things occur. So not only do you buy it, but you furnish it and you make it your own and you put your decorating touches. So the home building economy is not just a home on a piece of land. It's a lot more than that, and I guess that's the concern. So you see how it affects not just the one builder who's putting it. It affects a lot of other people, services, products, and good manufacturing, the whole bit, all through the economy, which is interesting. So having said that, I've been reading a lot of articles over the past months here, and recently we talked a bit about if we go back 10 plus years ago when we had the first housing bubble and then a crash and crisis, the thought process by economists and the people in charge and mortgage people, real estate people, the whole bit was denial. It's a blip in the marketplace. It's going to correct. This is a short-term problem. Let's deny, deny, deny. We don't believe this is happening. Well, it happened, and it happened big time. Well, now there's kind of more of an acceptance out there. So people go, yeah, I think prices are high, okay? And we've kind of got this sort of agreement now. So rates are rising, and they will continue to rise, okay, interest rates. Why? Because they have this year. The Fed apparently is going to raise rates in December and planned at least 2 for sure, maybe even 3 minimum next year in 2019. So we all know that rates are going to rise. It's a given fact. We accept that. Property values have peaked. That's kind of been an acceptance by everybody as well too. We saw some big numbers in July with the CaseShiller National Home Price Index, 11.2% over what it was in the peak of 2006, which is great. Okay, everything's humming along now. So we all agree that we've seen the peak. And the peak is it's here or we've just passed it. So more inventory is coming on. We can all see that and agree it's happening. Prices should balance out. And I guess the words I'm looking or reading from people that are talking about this, and again, it's not the fact that people are stating this word or this sentiment. It's the fact that obviously if your business depends on it, you want to sort of package your opinion in words as to not be alarmist, I would assume. So the words I'm hearing are balance and equilibrium. So the words, yeah, we could admit maybe we've been a little bit high and some peaking and some frothiness, whatever it is, but we see the future as balancing out. We see the fact that the market should go to equilibrium. And this is the new projected reality, which I think is interesting. So a market, we're not talking shift, bubble, crash, crisis, correction. Now we're talking, balance and equilibrium. So there's going to be, what was a seller's market, we're now going towards a buyer's market. So we'd like it to balance out. Well, I certainly think that it's going to be the other way. It's going to be a buyer's market for sure. And there's still much more to decrease with respect to home values, prices, volume of inventory, things like that. But just realize that we're going away from the kind of bubble talk now because we've had a few months of it. And people, again, they get comfortable and they want to believe it's not there. So this is kind of what I call a denial sort of statement in bubble theory. So we acknowledge there's stuff going on. We acknowledge there could be something going on in the future, or we expect it, but we think it's balanced. So we're telling ourselves that it's balanced and balance is good. Equilibrium is good. Don't be too concerned. Don't be shocked at this. Everything's going to be okay. Continue, just continue, as onward and upward as we have over the past little while. So again, this is part of the bubble theory where, you have the euphoria and then you have, I'll talk about that maybe next video. But again, this is a denial component here. What I'm trying to get at is the fact that people think, okay, we're at a certain point, but I'm not really going to look at it. I don't want to believe that we could have issues in the near future. So denial. So my concern is still happening, folks. I mean, right now, as I said, we're in that transition time where we see September numbers have come, at least the sales volume. We don't have the values of September until CaseShiller comes out, and that's probably not going to be until next month maybe, or at the end of this month. But we'll start to see the slide happening, because as we go through the fall months into the end of the year, normally, seasonally, sales do slow down and things do happen to sort of, like I say, quiet down over the holiday time frame. So that's what we're going to look forward to, at least looking at the next little while. So again, that's sort of the news of the past couple of days. Lots going on. Appreciate the views and the comments. And, again, if you have any questions, certainly give me a shout. Randy at luxuryshortsales.com. Feel free to email me, chat, whatever you want to do. If you want to know how to invest or some opportunities we're looking at as this unfolds, certainly contact me. We can go over stuff like that. But again, seeing some changes, seeing, things are starting now. So it's peaked. We're starting to see some crumbling, and we'll probably see a lot more of this as the next few months go on. All right, well, have a good few days, and we'll talk to you guys soon.